So here's the thing, right? Whenever you hear someone talk about price action trading, it's always, just scratching the surface level, right? They talk stuff like, support resistance, hammer, shooting stars, and whatnot. So those are really just the basic amateur surface level stuff, right? Because as you dive deeper into price action trading, you realize that there's a whole world, right? There's a whole new aspect to it. For example, right? How do you tell whether, support level will break or not? How do you identify low risk, high reward trading setups? How do you know where other traders, put their stop loss so you don't put the same place as them, right, and get stopped out together, and much, much more. So this is why I say that, price action trading is really more than just support resistance and some basic candlestick patterns. Okay, so in today's video, I want to share with you price action trading hacks that you can use right away to get results fast. Sounds good, right? Then here's what I want you to do right now. Hit the subscribe button below, right? Subscribe to my channel, right? Hit the thumbs up button as well. And this way, right, whenever I publish a new video, you'll never miss an update ever again. Sounds good? So do it right now, okay? And then let's begin. So the first price action trading hack that I want to share with you is this. Is that you don't want to put your stop loss, right, at a level where everyone else is putting, right? So where is everyone else putting their stop loss? So if you've studied, textbooks, courses and stuff like that, they tell you to, put your stop loss just above resistance and just below support. So something like this, right? Let me walk you through an example. So for example, okay, you can see over here, traders, right, will see that this move, it's coming up, right? It's smack into this area of resistance. So what do? Well, they go short, right? After all, there is a bearish looking candle. Time to go short, right? And then have their stop loss, above the highs or above this highs over here, because that's what the textbook says, right? Put your stop loss just above resistance. And then what happens? You see the market retrace slightly lower, hit those cluster of stops above here, and then continue lower. Okay, I can share with you more examples, right? If you look back again, this pattern, right, it keeps repeating itself. So let's see where else I can find. Okay, so I think this is a pretty decent one. Okay, here, this area of support, price comes into this level, but not quite into this level. Then it starts to rally over here, right? Bullish engulfing pattern. Oh, market is going higher. Time to buy. Okay, so that's what traders do. They see the candlestick pattern is bullish. It's near support, but because they have the fear of missing the move, they don't want to wait. They just buy first. And where do they put their stop loss? Hey, I think the textbook says put below support. So let me find support. I think this is a level of support. Maybe this one is over here as well. So let me just put below here, right, to be conservative. And then what happens? Market swings down lower over here, hits their stop loss, and then rally up higher. So can you see the point I'm trying to bring, right? Whenever you put your stop loss, right, the golden rule, right, is, set it away from market structure. In fact, I have two guidelines. The first guideline is this, is that you want to set your stop loss, right, at a level where if the price reaches, it will invalidate your trading setup. Okay, so this means if you were to be trading plain old support, okay, so if this means if the price breaks support, right, it invalidates your support level, you want to exit the trade. The second criteria that I have is that whenever you set your stop loss, right, it has to be a distance away from market structure. So for example, right, what this means is that sometimes, support is like this, okay, and traders, they can just put it just below this area of support, just below here. After all, if the price comes to this one, support seems broken, right, and it's not wrong to put there, but as you've seen, right, if you just put it just below support, right, it's very easy for the market to trigger those stop loss and then reverse back in your favor. So the second criteria I have is to give it a distance, right, away from market structure. So a distance away, a distance like this, a buffer, right? So your stop loss would ideally be somewhere here now. Okay, a distance away from market structure. So you can see that in this instance, right, you won't put it just below this low or this low. You want to give it some distance, right? Possibly putting it somewhere here, so you can withstand the so-called stop hunt, right? Should it come, right? And don't get stopped out too early. All right, so this is the first price action trading hack that I have for you, right? Don't set your stop loss, right, at obvious levels. It's really asking the market to, hey, take me. Asking for it. Okay, the second price action trading hack that I want to share with you, it's this. Okay, let's have a look at Bitcoin. Okay, daily time frame. Okay. So the second price action trading hack, right, is that whenever you trade breakouts, you want to trade it with a build up. So what is a build up? So let me share with you how not to trade breakouts first. So let's say the market is it's in a range like this, okay? And from here goes all the way up higher, break above this area of resistance, all right? You don't want to be buying breakout at this point in time. Why is that? Well, a couple of reasons. First reason is that the market has moved quite a distance, right, within a short period of time. And chances are it needs to breathe. Okay, it needs to take a breather. So what this means is that the market could possibly pull back or even retrace altogether, right? Because it has, expended, a lot of energy within a short period of time. If you don't believe me, you go to the track right now and sprint 100 meter. Tell me, right, at the 100 meter mark, do you feel still like, carrying it on or take a breather to pause? Chances are that you want to pause, right? And it's the same in trading, right? When the market moves too fast, too soon, right, it needs to take a breather as well. So that's the first reason. Second reason, right, is more of from a risk to reward standpoint, right? If you imagine this, right, let me just redraw this. If you were to buy again, right, market rally from the lows all the way to the highs, you buy this breakout, where is the logical place to put your stop loss? Below support, right? I just said don't put below support and you tell me below support. Okay, let's say, a distance below support, maybe somewhere here. You can see that now from a risk to reward standpoint, your stop loss, right, is this white over here, your stop loss. So this means that the market has to move this much just for you to earn 1R, which is one time your initial risk amount. Maybe you're risking stop loss $500. The market have to move this much for you to make $500. So that's not very favorable from a risk to reward standpoint. So what is my suggestion, right? So this is why I said earlier, if you recall, whenever you trade breakouts, you want to trade it with a build up. So what is a build up? A build up is a very simple concept. It's basically the market, right? Now, this time around, let's do it the opposite side, right? Okay, never mind. Let's just do the same direction. A build up is like this, right? Where there is a tight consolidation over here. So can you see the difference now? With a build up, you can actually reference this low to set your stop loss. You no longer have to reference this original area of support. You can actually reference this low over here as your stop loss. Just, give it some buffer below the low. So from a risk to reward standpoint, your stop loss is now tighter. So the market doesn't have to move too much in your favor for you to earn 1R. So that's the first so-called benefit. The second thing is that this is a sign of strength, right? Whenever you see the market comes into a key level like support resistance and it hovers around here, what this tells you is that at this price area, there are buyers willing to buy at this higher prices. Okay, because if you know that resistance, right, is an area where there is selling pressure. So whenever price comes to resistance, you kind of expect that, the price to reverse from there. But the fact that the price can still hover in front of resistance, still hold up over here, is telling you that, there is buying pressure willing to support at these higher prices. Okay, so whenever you want to trade breakouts, trade it with a build up. So one fine example is over here, Bitcoin. Okay, so prior to the breakdown at 6,000, right, could you have seen this coming? Well, again, if you read the price action of the market, the clues were there. There is no guarantee, but the clues were there. You can see that over here, this is this area of support at 6,000. Pretty nice descending triangle. And you can see that this over here is the build-up that I mentioned earlier. Okay, the nice tight build-up consolidation. Because now, if the price were to break down, where do you set your stop loss, right? You don't have to set it at this high, or this high. Because you now can just reference from this swing high. Okay, and set your stop loss. Now your stop loss is much tighter. All right, makes sense? So after which, right, Bitcoin, it did explode down lower at this point in time, right? Say, for example, at this lows over here. You don't want to be shorting at this point over here. Why is that? Because the market has moved too fast, too soon, right? You have no logical place to put your stop loss. Again, if you want to use the original level as your stop loss, right, the nearest one would be at this swing high over here, which is very far away, and from a risk to reward standpoint, it's not very attractive. So just one final example before we move on to our next price action trading hack. I think dollar Canadian is one of the more very beautiful textbook example. So if you really want, you can even screenshot these charts and know can refer them in future as well. Okay, where is the dollar Canadian one? So I'm trying to find it. Okay, I don't really see it right now. I remember, okay, this one, there, here it is. So you can see over here, right? Are you seeing what I'm seeing, B1? I'm just kidding, right? Those are banana in pajamas, right? When I was in my younger days, right? Are you seeing what I'm seeing, B1? Yes, I am. B2, it's kitty time, you know, something like that. So anyway, this is crazy. So anyway, again, over here on dollar Canadian, you can see that over here, this is the build up that I was trying to share. Okay, nice, tight consolidation. So again, traders who buy the breakout of this highs, or maybe even this highs, you can just reference this swing low to set your stop loss, right? It's much tighter now, right, in terms of stop loss. And you know, from a risk management perspective, the tighter your stop loss, right, the larger the position size you can put on, right, while still keeping your risk constant. Okay, so this is the second price action trading hack that I have for you. Moving on, the third one, the third price action trading hack is this. Let me just get the charts out first. Is that it's actually similar to what I just shared earlier. I said that, you know, when the market moves too fast, too soon, right, it tends to reverse, right, or pull back. So using this concept, right, this means that if you want to trade reversal, you want to see the too fast, too soon move that occurred. Because you know that if the market moves too fast, too soon, right, there's a good chance that it could reverse or even do a pullback, and that there's opportunity for you to make a profit. So whenever you trade reversal, let's say reversal of a support resistance, right, market comes straight into a level, a strong level, you want to trade the reversal up higher. Comes up here, you want to trade the reversal down lower. Okay, so what you're looking for, the key price action aspect is to look for a strong power move coming into a level. This is where the candles, the body of the candles are large, strong, and bold, right? That is what you want to see. You don't want to see build up now because you're not trading breakout. You want to see strong power move coming into a level. Those are the type of moves, right, that could precede the reversal. No guarantee, all about probabilities, right? But these are the stuff, you know, that has worked for me. So again, let me just plot out some levels so your eyes can see it clearly. Okay, so you can see over here, pretty nice strong power move into market structure, this area of resistance, right? Notice the boldness of the candle, the strength of the move. Okay, there is no build up over here. It's just a strong power move. So whenever you get such moves, right, all that's left to do is to wait for a price rejection, right? A reversal candlestick pattern to, you know, take the trade towards the opposite direction. So in this case, a little bit more messy over here, but I believe you have this what they call shooting star pattern over here within this messy range, or you can even go down to the lower time frame to read the price action and time your entry. But the key thing that I want to share with you is that notice this strong power move coming into market structure. This usually, right, are the type of moves, right, that you want to trade the reversal, not the breakout. Okay, another example is this one over here, the other one towards the downside, strong power move towards the downside. Then you have this bullish engulfing, market did rally, pull back, finally breaking out over here. All right, so this is what I mean by a clean move into market structure. Just one final example. I'd like to share, you know, more examples so you guys, you know, really absorb the concept. It's the 5-year Treasury note futures. So again, you can see over here, strong, clean power move into market structure. In this case, it's resistance, followed by I think it's called a piercing pattern. Market then reverse down lower. So notice, right, strong, bold, power move into market structure. When you see such moves, right, these are usually moves that you want to trade the reversal, not the breakout. Okay, moving on, right, the next price action trading tip, right, we are number 4 now. Okay, how many price action trading tip am I going to cover? Right, I'll let you, you know, figure that out at the end of this video. Okay, the next price action trading tip I have for you, it's basically this. So whenever you look at a chart, you want to ask yourself, right, where is the area of value? So what do I mean by area of value? So whenever you go to the supermarket, you buy apples, right? You want to buy apples when it's, you know, $3 for $2. You don't want to buy apples when it's, you know, 10 for no, $100 or one apple for $5. No, you want to buy value, and it's the same for trading. You want to trade from an area of value. So how do you define value? There are numerous ways you can define value. Support, resistance, trend line, channel, moving average. Basically, right, areas on your chart where the market mean reverts to. Okay, it sounds complex, but I'll explain, and you realize that it's not that difficult of a concept to grasp. So in this case, palladium, a couple of ways you can identify the mean reversion, all right, or the area of value. But for simplicity's sake, right, the 50 MA is a pretty good guideline. Notice, right, the market at this point in time, in this condition, it tends to mean revert towards the 50 MA, 50 MA, 50 MA. It did exceed over here before going back up higher. 50 MA, 50 MA, 50 MA. So this means, right, from a price action trading perspective, you don't want to be buying when the market is at this highs over here. Where is it at this highs over here? Why is that? Again, back to our risk to reward point. If you buy at this highs, okay, at this highs, again, your logical stop loss has to go below this moving average, and it can be pretty wide. I mean, if you don't mind, sure, you can buy and just have a wider stop loss. I mean, it's your preference, right? But for me, I prefer for the price to be at area of value near towards the moving average. This means I could have a tighter stop loss. Okay, so in this case, price just broke down. There wasn't any entry trigger to go long, but if I wanted to trade from an area of value, it would be near this area of value, near the 50 MA. Okay, so this is what I mean by area of value. Another one to share with you. You can see over here, dollar yen. Oh, nice. I already draw the trend line. So again, as I've said, right, the moving average is just one way to define the area of value. Sometimes when the trend is choppy, moving average won't really cut it out, right? So this is where trend line might help. So in this case, we have this trend line that I've drawn over here. Tested once, twice, almost thrice, 4, and right now it's at this area of value once again, right? Buying at this trend, near this upward trend line. Again, if you were to go long, your stop loss, right, could just be a buffer, a distance away from this market structure somewhere here. And hey, price would hit up here, possibly even breaking out above the highs, maybe, never know. So again, from a risk to reward standpoint, right, buying close to the area of value, it's usually one of the better times, right, to be entering your trade. Do I have another example? I think yep, I do. Right, so we have covered moving average, we've covered trend line. So now we just look at plain old vanilla support resistance. So this one over here, I'm going to draw the obvious SR level. Okay, just quickly draw it without any tweaking, right? So you can see that over here, where is the area of value on the chart. So clearly this one, trend line doesn't seem to be working too well. Neither is moving average. But if you use your plain old vanilla support resistance, right, this would be a good area of value to be trading from. If the price comes down, gets rejected, that would be a possible signal to go long. Comes up here, gets rejected, right? Possible signal to go short at this area of resistance. So this is your area of value, right, that I've shared with you. All right, and this is the 4th price action trading hack. And finally, okay, that's a clue, right? Finally, right, another price action trading hack that I want to share with you is a term, what I call the first pullback. So often, right, let me just take you back earlier to the breakout aspect, the breakout topic we mentioned earlier, where I said that you don't want to be buying breakouts, right, without a build up, right? Like here to here, just breakout. You don't want to be buying without a build up. And then some of you might be thinking, but Rainer, I don't want to miss the move. All right, I still want to catch a piece of the move, right? How can I do it, right? What if the market doesn't, retrace back towards this area of support? What if the market doesn't retrace back to previous resistance turn support? Am I going to miss the move? Well, not quite, because this is where, you can look for the first pullback. So the first pullback is simply literally the first pullback out of a range. So in this case, right, you look something like a flag pattern, a bull flag. Okay, then it breaks above this highs, and you can look to get long. Again, the beauty of this is that when you wait for the first pullback, you can reference this swing low as your stop loss. Again, can you see that, the concepts are just basically building one concept on top of another. Right now, if you did not wait for that pullback, there is no logical place to put your stop loss. Sure, you can put below support, but as I've mentioned already, stop loss is wide. But if you wait for a pullback, like a bull flag pattern and bear flag pattern, you can reference this swing low now, right, to set your stop loss, and that gives you, right, a tighter stop loss, and in return, a better risk to reward. So this is what I mean by the first pullback. And on top of it, you can be sure that you're not the only trader who missed the move. There are other traders, right, who missed the move as well. So often when the market breaks out, right, when it does the first pullback, to me, that is usually the best time to be trading pullback, right? Traders who miss the move, they all, pile on together, right, get on board the trade and push the next wave, right, further. So an example, right, I know you like example. So obviously, right, these are all cherry-picked charts to illustrate my point. Only an idiot will pick a chart that goes against their point, right? I've got, comments. Oh, trader, oh, Rainer, your charts are all cherry-picked. Like, I'm not an idiot, right? Okay, so... TVC, what is TVC? Oh, when, okay. So... Again, just to illustrate my point. Again, so what you want to look for is a long-term range, right? When the market is in a range and then you finally break down that first pullback, pay attention to it, right? Because that is usually, right, the highest probability pullback trade that you can possibly get. So again, this one over here, you can see that this is an area of support. Market is in this area of support, or rather, it's largely in this range, right? Here, down. From the highs to the lows, ranging back towards this highs, back towards this area of support. Then, market broke down. First pullback, right? What did Rainer say, right? Pay attention to the first pullback because this is where, there could still be a strong move down lower. Another leg of the move, right? In case you missed the first one. So this over here is what I call the first pullback. Couple of ways you can do it. You can either trade the break of this swing low or even the break of this this trend line that you can manage to connect over here. Okay, so the entry is not really important. I would say the concept, right, of the first pullback, it's really what matters. So let me just share with you another example. All right, dollar INR. Okay, this is okay, if I just zoom out later, right, you can see that this dollar against the Indian rupee is largely in a range as well, right, between around a 69 level, somewhere here. Okay, so if you didn't trade this breakout with a build up, this build up over here, we talk about the build up concept, right? This one, if you miss this one, don't worry, right? What you don't want to be doing is buying at this, at this highs over here. Why? Because price is now so far away from market structure. Stop loss is wide. And chances are, as I've said, right, too fast, too soon, market tends to reverse or pull back. So wait for the first pullback. And that pretty much occurred at this over here. All right, you have this pullback, somewhat this not really a textbook bull flag pattern, but you know that it's a pullback as you notice the range of the candles getting smaller and smaller. So how you could have traded it, right? Either the break of the trend line or the break of the swing high, and now you can just reference this swing low to set your stop loss. So from a risk to reward perspective, right, your stop loss, it's now tighter. Okay. So yes, right. That's what it's been a lot we've covered today. So let's do a quick recap. Okay, quick recap. First one, set your stop loss, right, away from market structure. That is the first tip that I have for you. Because, if you just set it below the lows or above the highs, very easy to get triggered. Second one you want to be doing is trade breakouts with a build up. Okay, the tight consolidation. This offers you a better risk to reward and a nearer place to set your stop loss. Number 3, if you want to trade reversals, right, look for a clean power move into a level, which is actually the opposite of point number 2 over here. Fourth thing, right, identify your area of value, maybe using moving average, trend line, trend channel, I don't know, whatever, suits you. And finally, the first pullback is the best pullback, right, especially if you miss breakout trades, don't worry, you can always wait for the first pullback, all right? So with that said, right, some of you now might be thinking, hey, Rainer, where can I learn more about your works? Okay, so let me just what can I do? Okay, so let me just get you a link that you can go to, so you can learn more about my trading strategies, techniques, and stuff like that. So for those of you who are interested in that part, okay, this is where you can go to. Okay, over here at my website, you can see that tradingwithrainer.com. I just put a link here. Just scroll down to the bottom, right? I got a couple of trading guides, depending what you want to learn. Price action trading, trend following, right? So just download the relevant ones. Download both if you want to. If you want to learn everything, all right, just download it. It's free. So the ultimate guide to price action trading focus on market structure, support resistance, entries and exits. So if that is for you, then download this guide. If you want to learn more about trend following, right, riding trends in the market, long-term trends, short-term trends, medium-term trends, then the ultimate trend following guide is for you. So click this blue button, right, and I'll send this guide to your inbox for free. Okay, so with that said, I've come towards the end of today's video, price action trading hacks. Hope it helps. Do me a favor, hit the thumbs up button, subscribe to my YouTube channel. Okay, and if you have any questions, feedback, just let me know in the comments section below, and I'll be glad to help. So with that said, I wish you good luck and good trading. I'll talk to you soon.